All right, guys, from wherever you're watching in the world, hello, how are you? I hope you're okay. We certainly are. Life is really, really good for us, and I wish the same for you. All right, so let's just climb into today's market update. It's a Sunday. You should be spending time with your family and catching up with the things that you love. So we won't spend too much time on this. What I wanted to highlight is one of two things. One is market slide out and why it can happen, and how to trade the gann square. So let's get into the market slide out very quickly. So this ground control gives us the 32 minutes per candle view. This is nice and sensitive enough for us to make swing trades off of, and we use this to get our orders in, our stop losses in, and our targets in. So that's what the ground control is used for. The aerial view gives us an overview, almost like a drone looks over a battlefield, I suppose. The aerial view gives you a bird's eye view of what's happening in the market. This is very helpful to us because price has been super obedient to the right places. So the apex of this arc and this fan has pushed into this resistance slice really well, and so on and so on. So it gives us a great indication geometrically what the price wants to do next. And then of course the one above is the quarterly cycle, the 512, and pardon me, this over here has gone pretty well in confluence, and drifted down a bit. So just to kind of take it back a little while to yesterday's market update, price was over here on the 512, and it was kind of hanging up in the air a little bit. I had a sneaky suspicion that I was going to come down and find support over there before it decides to go further up. However, wasn't guaranteed. Sometimes, as you can see here, there's these big spurts that come upwards, and it could have happened that it did the same. But looking at it now, it wasn't going to do that. So the next natural thing for us to see price do would be see it go from there to this line over here. Okay, so what's misconceiving about these higher cycles is the candles don't look that big. Therefore, the space between here and there doesn't seem that big either. Now, that becomes, like I said, misconceiving when you're trying to base your trades off of these sort of things, because that looks like a small space, but actually in reality, it's quite a large one. It's about 12 to 24 hours, right? So let's just hit this play button on the replay. From the replay, and you can see how it's just etched along quite neatly and head towards this there's 1/2 line to see whether or not we'd like to go up or not. So if we're on an uptrend, this is our probability to the uptrend. Should it continue along this line, this is what we're likely to see. Should it not be the case, then that's okay too. We're in a downtrend. We're just going to wait for a downtrend confirmation and see where we go from there. So real quick, if we're in a downtrend, this is what that'll look like. Oops. But yeah, we'll see what happens. The reason why I'm looking at this as a potentiality is because the neatness of these candles are hugging this 1/2 line very neatly. So I don't know. I may or may not go in that direction. I'm hoping not. I would like to see a nice big bull run personally, but we like to keep our probabilities open because, as I've mentioned many times before, the future doesn't exist. So we can only use our highest probabilities to forecast what may or may not happen. So that's our uptrend option. Okay, so going back to the content, that little space transpires into this bigger space. And this bigger space is, oopsie, wrong one. Let's try that again. Bang. Okay, so this bigger space trans is trans something transpires to, I don't know. It gets it replicates what's happening on the higher cycles. It's obligated to. That's just the way this all works. So instead of it coming up like that as projected with this arrow over here, it's taken a different route to go along here instead. So I'm going to have to reanalyze this probability because that doesn't seem to be the case any longer. And then I also have to see whether or not this is a probability, because should this not be a probability, then there's something else going on here that we need to keep close attention to. For example, a potential downtrend that's trying to kick off. Okay, so once again, if you look at this geometrically, and I'll hide that over there, you can see quite obviously how well there are these touch points in all the right places. Wow, this is scarily comfortable. Okay, so if I put that in there, I mean, I'll neaten it up and draw it up properly. But more or less, you can see here how well it's behaved inside the kill zone, how it's hugged hugged the kill zone. It got rejected over the 1/2. Now it's come down to the 1/1. Got rejected at the third arc, second arc, or whatever it is. Wow, that was a sneaky little move there, mate. So we'll have to see what happens. 'Cause, I mean, I was suspicious. Like, if you saw my video yesterday, I drew a gann square up and to the downside, and the reason I'd done so is because of the switch here that I've seen on this oscillator, being an indicator that there is something going on with trend, right? So I turned a little bit of a blind eye to it. To be honest, I didn't get into a trade, and I'll explain to you as to why. But I can see now that we could be heading down for a little bit. So I'm going to have to draw this up from a probability perspective and see what lines up over here. Because if this is the new turning point, then this 69,000 is no longer relevant. And in pop culture terms, it gets cancelled. So I'll have to see if that's true or not. But for now, I'm leaning in towards turning points. This next turning points have been formed until further notice. So I'm not sure. I'm going to have to check that out and get back to you on that. Let's just see again what it looks like with the uptrend option. Is that still here somewhere? That's weird. Did I delete it? Okay, I don't want to waste your time, so I'll do it on in my own time, and then get that out to you, or get it out to the group today, and then on to TradingView tomorrow. All right, so let's have a look at our ground control. Now, what I want you guys to see here is where I left this yesterday, okay? So this would have been the probability should we have continued uptrend without the slide out, and it would have been a-okay, but of course the higher frames have got their own obligation to fulfill, so that's what they're currently doing. But from our own perspective, even if you got into this trade, what I want you to keep aware of is that you would have been protected, right? I just want to confirm, no, this wasn't where I left it off. I left it off over here, if I remember correctly, which I think is correct. We can go back and have a look if we want. Okay, always lock your gann square, by the way, because it gets very frustrating when you try to move your other tools and the gann square moves instead. Okay, so what I'm seeing here, well, what I want you to learn from this is to never trade inside the kill zone. Now, the kill zone is this first arc that combines the beginning of this first square and the beginning of that first square. And within this zone will tell us a lot of things. It'll tell us where the market probability is likely to go, but it'll also tell us whether or not to get into a trade. So we don't trade inside this kill zone, this inner circle over here. So when it comes up and it goes to this 4/1 line but doesn't continue upwards, and it kind of drops back into the kill zone, like we're already getting out of the trade over here at break even. Should we have got in around about there? So just minus maybe like a 2% loss, depending on our trade on 20x. So it would have been like a minor loss, which is okay. And then we would have waited for some more kill zone out of kill zone action. So it did do that. It came out over there, which was not a good thing. Let's have a look at what would have happened. But I don't want to, like again, I don't want to keep this going on and on and on. It is a Sunday morning. You've got more important things to focus on. But what I wanted to say is that when you set your targets, when you get into your positions, make sure it's never in this kill zone. Okay, so that's the reason. One of the reasons why we wait for the price to leave it is so that this kind of weird stuff doesn't catch us off guard. And like again, we were protected. For anyone else who encountered a loss, then I'd recommend you take your notepad and write this information down. So never trade inside the kill zone. And whilst you're doing so, also write down on your little notepad to say that to set where you set your stop loss on this is below your recent turning point. So we had turning point 8 set up over there. So we would have had our stop loss right here. And then price, if you didn't get out at the right time, if you weren't at the computer, if you're out or something like that, price would have come down, and then boom, you would have been taken out over there. Sure, you would have been a bit frustrated to see it go up again, but it didn't go up by much, and then boom, you would have been protected as it dropped out. So that's how you use the Gann square to set your entry and how to protect your capital if you're not getting out at the right time on your own accord, that is. And just by the way, if you want to learn how to set your targets, obviously come through to me, send me a message. I can teach you how to do that. But in terms of protecting capital and setting entries, that's how I utilize that for the Gann square. So right now, without changing the ratio of the Gann square, sorry, I forgot I locked it. I'll drag this down over here to lay down our next turning point, which will be turning point 8 still, and then calculate turning point 9, which I think will be relatively tight. And then from here, I don't know if I'm comfortable shorting at the moment. I would like market to tell us what it wants, because we're at one of those cross sections again. And yes, guys, I know it's frustrating. I know it's so frustrating to protect your capital and to sit back and watching price move and having to sit back and sit back and sit back. But it's only frustrating if you're trading your own money. Like, let me tell you, when you trade institutional money, when you're trading OPM, other people's money, then you're just grateful that you're going to earn thousands of dollars at the end of the month for being patient and just finding the right setups, the right opportunities to get it in and out, get that nice okay, so with institutional money and that kind of thing, you don't even, like, if you don't trade for the entire week, you're going to be okay. Like, you just need, I'd say, between 4 and 6 trades for the month in right market conditions, and you're earning thousands of dollars, guys. And I'm not over exaggerating, literally thousands of dollars for making a handful of trades a month. So if you're feeling the frustration, don't lean into it. Don't be a victim of yourself. Just let the market tell you exactly what it wants, and then once you've seen that it's doing exactly what we expect it to do, and it's playing the game, and everything's in flow, just boom. That's how you just rake in those big numbers. So until then, just remain patient. If you didn't trade this week, if you didn't put a single buy this week in, take a deep breath. That's okay. You're doing the right thing. So keep that up. I'm very proud of you if you did manage to do that. And let's see what this market wants to do. Again, so we work in a world of probability. There is no such thing as the absolute, and the future doesn't exist. So when things do become a bit cheeky or weird, we're right there at the starting line there, to make sure that we're first to adjust to what the market wants next. So we're nimble and we're close to the pulse of this, and I recommend doing the same. Don't get too egotistical about plays just because you put your position in and you feel like, okay, cool, my position is in, it's going to go to target, it's got to go to target, I've put in so much time and effort and energy into this week, it's got to go to target, and then boom, it slides out, hits the stop loss, or takes you into the red, and you're like, oh gosh, what's going on, blah, blah, blah. Work with the market, respect the market, flow with the market, and when it's the right time to make those big plays, be there for that. That's how you win at this game. All right, guys, absolutely awesome hanging out with you. I hope you found a lot of value in this video. If you'd like to know more, as always, send me a direct message or leave a comment, get hold of me somewhere, and I can teach exactly what I'm doing here to you so you can do this for yourself. All right, guys, again and again and again, have a good day. Ciao for now, and we'll see you tomorrow.